Welcome back to another eye-opening financial breakdown. Today, we're delving into the world of pharmaceuticals and dissecting the intriguing story behind Eli Lilly and Company. From earnings to dividends, ratios to revenue, we've got it all covered in this 4-minute roller coaster of financial insights. So, buckle up and let's get started. Let's kick things off with the valuation metrics that give us a sneak peek into Eli Lilly's financial picture. The price-to-earnings ratio over the trailing 12 months stands at 83.87. But hey, don't let that scare you off. Over the past 5 years, it's been a more comfortable 30.05. And looking forward, the forward PR comes in at 43.02. Keeping the growth potential in check, the price-earnings-to-growth ratio sits at 3.49, suggesting again a possible overvaluation of the stock. Hold on tight, because we're diving into some return and efficiency stats now. The return on equity is a staggering 56.2%, showcasing Eli Lilly's knack for turning shareholders' investments into gold. Meanwhile, the return on assets clocks in at a solid 11.5%, highlighting the company's ability to squeeze value from its assets. Hold on to your seats, because here comes the EPS at a formidable $6.30. But that's not all. The projected EPS growth over the next 5 years is a staggering 24.02%. Talk about a bullish dividends, anyone? Eli Lilly isn't stingy either. With a current dividend yield of 0.86%, the company boasts a track record of consistent growth. Over the past 10 years, the dividends have grown at a compounded annual growth rate of 7.97%. But wait, there's more. If we zoom into the last 5 years, that growth rate jumps to a whopping 15%, and this tendency seems to maintain for a long period of time. Impressive, right? Margins matter, and Eli Lilly knows it. The operating margin stands strong at 22.5%, indicating efficient cost management. And when it comes to the profit margin, the figure is a healthy 20.5%, proving that the company knows how to convert revenue into actual profit. Fasten your seatbelts for a look at the revenue and earnings journey. Over the last 10 years, Eli Lilly has consistently hovered around $20 billion in revenue, but in 2020, things started to change. By mid-2023, they've hit nearly $30 billion. Earnings? Mostly on the rise, except for a hiccup between 2017 and 2018 when a challenge was faced head-on. Cash flow's the name of the game, and Eli Lilly's been playing it well. With a consistently positive evolution over 5 years, it's clear the company knows how to manage its money. However, in 2023, there was a minor dip, bringing the free cash flow to around $3 billion. Talking about debt, the debt-to-equity ratio sits at 1.69, indicating a balance between borrowed and owner's funds. But in this time of high interest rates, we could be facing a somewhat high ratio value, and special care should be taken in the coming months and see if they are able to reduce their debt. Lights, camera, market action. Over the last 52 weeks, Eli Lilly's stock has sprinted with an average return of 75.41%. Finally, the market capitalization stands at an impressive $475.08 million, making Lilly the largest company in the healthcare sector. Analysts have been crunching numbers and foresee an average price of $531.37 in the next 12 months, suggesting a modest increase of 0.58%. But hold up, because there's a twist in this tale. While analysts may be predicting a brighter future, our deep dive reveals a different story. Our own analysis points toward a fair value of $487.30, a tad below the current price. This intriguing gap suggests a current potential overvaluation scenario. And there you have it, intrepid finance aficionados. We've uncovered the intricate numbers behind the scenes at Eli Lilly and Company. From astonishing returns to dividend growth, revenue leaps to market predictions, it's been a whirlwind journey. So, what's your take? Is Eli Lilly headed for even greater heights, or is there a correction on the horizon? As always, remember to do your research and make informed decisions. Until next time, stay curious and keep exploring.